Hello world, how you guys doing? Good afternoon from my end. Good morning, good evening, whatever part of the world you are streaming from. I would like to have you guys as always. And it's a nice time again. Today is Monday. It's another time for us to do what we're expecting for this new week. All right. But before we proceed, I'd like you guys to comment where you guys are joining me from. I'm right now in Dubai. And what about you guys? Where are you guys joining me from? What's your location? Comment your location in the chat box. There's somebody that says from Jamaica. This from Celestine. Nice to have you, Celestine, on the call. You can put in your name too. I see people are just sending in their location without the name. So someone from UK, Franco from UK, Franco Jacobs, joining from Dubai, Bradford, UK, Dubai, Lagos, Zambia, Enugu, Bangladesh, South Africa, Benin, Liberia, UK. I mean, it's a lot of people right here. We have so nice. We have people from Rwanda. I'm joining from Dubai too as well. Liberia, Belkuta. I'm joining from Mauritius. I'm joining from Ibadan, Oshun, Abidjan, Kolawole, Delta, Port Harcourt, Uganda, Kaduna, Nigeria, London, UK, the other states. We have people from all over the world basically right here that are joining us. Okay, nice. Now we have our premium member. That's Abdul Malik from Ilorin. Nice to have you here, Abdul Malik from Edo State, Gambia, OAU, Lagos, from all over the world. Nice. So good. Today we're going to be talking about mistakes traders make when setting stop losses. In fact, stop losses are pretty much important. Stop losses is why you see I'm glowing this way. Else, I would have been crying by now because there are market situations where if you don't use stop losses, your account will be wiped. Stop loss is where you see why you see trader is staying in market for 5 years, 10 years, 15 years, 20 years, 25, 50 years, and then they are still going. All right. It's because these guys, they know how to use stop losses. All right. It's really crucial that you know and you have understanding of how stop losses work. So that's why I just want to discuss with you guys. And we also notice that people understand that stop loss is important, but then they are doing it wrongly. So we just have a new member. That's Ashiwaju Ajibola. Thank you for joining our YouTube membership. We appreciate you and we recognize you. So, and we also did notice that people are doing it wrongly. They are setting the stop losses wrongly. So I would be discussing with you today the mistakes traders make when setting stop losses. So this is how this class is going to go, or this live call is going to go. Let me go live on YouTube, on Facebook. So I just remember, I almost forgot because Facebook people been wanting me to go live with them for the longest time. So let me also go live. Let me go live with them. So mistakes traders make when setting stop losses. That's what we're going to be discussing today. So Shams, this is how today's class is going to go. I'm going to talk about the mistakes traders make. First, I'm going to talk about the current trade, my outlook. That's going to be the starting. Then Shams will take us on the mistakes, the points on our slides that he has, and then I will come in. William will also go in to talk about the mistake he also made while he was starting out and how you can avoid that. And then I wrap it up, and then we call it a day. Deal? Okay, good. So first, let me share my screen on the chats. Let me share my screen on the chat. So those who are on Facebook, nice to have you guys here too as well. Nice. All right. So we're discussing mistakes first traders make when setting stops. I don't have a stand. I would love to have this stand here. All right. Nice to have you guys. Okay, Suleiman Sese said his name is Haji and he's from Sierra Leone. Nice to have you there on YouTube. We have different people from all over the world, right? Nice. So can you guys see my screen clearly? Yes, everyone can see. Can you see my screen clearly? Just want to make sure that you can see. So member, that's Ashiwaju Ajibola, says that he's from Lagos. Okay, amazing. Congratulations for joining us. It's a new season for us all. All right. So I want to talk about the current chart we are seeing. So what you want to do for me is go on your chart. Those are on Facebook. Go on your GBP USD chart and take it to 4-hour time frame. So like this, GBPUSD, search GBPUSD and click on GBPUSD by FSCM, go to your 4-hour time frame, and then I want to first show you how to get the high and low for the week. So the high and low for the week is the first 2 candles to form for the week. So the first 2 candles is 1, 2. So yeah, all you want to do is to take this horizontal ray, you put it at the high there, put this one at the lowest. These are the high and low of the week. Easy peasy, right? So what this does for us is it lets us know what the market will likely be doing for the week, more of what it will be doing for the week, right? But for this week, we should be having more of buys, like from what I can see, just looking at it barely. I'm not making decision based off of handle of the week, but based on structure, how market is tilting. It's looking like it's breaking up, it's moving towards upside. So that's why I'm making this, I'm saying this. All right. So with high and low of the week, we'll get to know exactly what the market will be headed in no time. Okay. So I think let me share my screen. Yeah. So this is what you're going to be looking out for. So now, what's my opinion right now regarding the forex market, regarding the markets? That'll be the question that you want to ask. So right now, if you're to make profit, I'll be on the side of a buy. All right, I'll be on buy side signal. I want to be a bias, because from this point, all I can see is price is heading up. So what I would advise now, if someone I want to long, go in for a long at this point. Go in for long at this point, right? And then you put your stop somewhere around here. Target times 2, that's 21 pip stop. Target's 40 pip stop loss. So this is how you target 40 pips stop. All right. So this is what I'm looking at. This is what I'm looking out for right now. This is on GBPUSD. This is on GBPUSD. So in case you're on Facebook, check. It's on GBPUSD. Then you can see it. This is what I'll be looking out for. It's a quick scalp. So quick scalp. So if you have any question, just let me know. So now let's go ahead and proceed to discuss mistakes traders make in setting stop loss. Now, I just set my stop loss to this point, 1 point. How did I know that this is the actual stop loss to put? How did I know? How did I know I'm not making mistake of 1.25157? That's the stop loss. How did I know? That's what we're about to discuss. And I'm happy that Shams, are you here? Shams, are you there? Can you unmute to discuss the point on stop losses?
Can you hear me? Can you see me? Hello.
We can hear you, but we can't see you. Since we can hear you, it's fine.
Hello.
Yeah, I can hear you. Can you hear me? All right. Okay, so Sham's network is acting up. So let me just go ahead and onboard everything. And all right, I'm trying to bring on the slide that Shams has sent to me. He made those slides, so that's why I always love that he presents it. But now, since his network is acting up, I have no option than to be the one to present it. So let's see. Okay, good. Stop the screen sharing and share a new screen. Okay, good. So while we are still holding that by, let's talk about this screen right here. Let me exit this. WhatsApp so that we don't have notification popping up and disturbing us. So it's titled Mistakes Traders Make When Setting Stop Losses. So next slide is simple. Say, what is stop loss first? Let me flip my screen. What is a stop loss? So stop loss is an order type of trading designed to limit a trader's potential loss on a position. It automatically closes a position when the market price reaches a specified level, allowing traders to manage their risk exposure and protect their investment from significant losses. So stop loss is simply this stuff that I showed you guys here. So what it simply means now we are on this trade, right? We said buy. These are our entry points. Entry point is where we got in. Entry point. So E for entry point. E. Then this is our stop loss. SL for stop loss. SL. Stop loss. Then take profit is TP. We are not discussing take profit nor entry today. We are discussing stop loss only. So stop loss. So if you got in here as an entry price, now the price that you would have gotten as the time I called this trade would have been how much? 1.25376. Now you should be in profit. Okay, you should be in profit. But however, what happens if the trade whipsaw start coming against us, start coming down? That's where stop loss is important. Stop loss is simply an order that you send to your broker, telling them that if price gets to this significant price, this price, any price that I set it at, please cut me out. I'm not interested again. I don't want to lose more than that. So it is because of stop loss that we can confidently say Forex is the only business that is the most risk-free business in the world. It's because of stop loss. So stop loss already allow you to predetermine what you stand to lose, okay, at a particular time. For example, like we always say, and this example I love to give. If you are selling eggs now, let's say for example you're doing smaller businesses, you're selling eggs, you don't know how many will spoil tomorrow. Something can just happen, 3 crates spoil and then affect the other ones. You can't tell. But as a trader, you can already predetermine, I don't want more than 2 eggs to spoil. I cannot risk more than X amount of this and that and that and this. So that's why Forex is considered one of the most safest business if done correctly, put in stops. Why you hear people that lose a lot of money saying that they're scared of trading and all of that is because they didn't use the right stops. Someone said they can't hear me on the live. It's because I had a call coming. Mic mode. I have to stop this. I'll come again. All right, so it is because you just need to sorry, those who are on Facebook say you can't hear me for some reason. All right, okay, people said they can hear me on YouTube, so it's because I had a call coming on the Facebook. I think they can hear me now. If you can hear me on Facebook, okay, they're coming on. So now that is just simply stop loss. Stop loss is the price we quoted here, and how to do that is you have to go to your MT4 or your MT5 to go and impute that number, that significant number. That number there is what is going to let your broker know that Jeff doesn't want to lose more than $1,000. Jeff doesn't want to lose more than $2,000. If price has gotten to that significant level, they cut you out in loss or in profit. Can you guys hear me now clearly on Facebook? Can you guys hear me? Just say yes or no. Yes or no. Can you hear me? Okay, good. Said yes. Thank you. All right. So these are the things that we're going to be discussing. So we're discussing the stop loss order. Nice. So let me go ahead to the next one. Then, how stop loss orders works. I've explained that, but let me just write what Shams has written down here. A trader sets a stop loss order by specifying a specific price, which is the price level at which the order will be triggered. All right. When the market price reaches its top price, the order becomes a market order, executing immediately at the best available price. For a long position, the stop loss is set below the entry price, and the stop loss order will be triggered if the market price falls to or below the stop price. Make sense? Look, let me explain. I think that's also clear for those who are seeing this for the first time. So, how it works. Anytime you are buying, you put a stop loss below, just like what we did right now in this current chart. If you're buying here, you put it. Now we are buying simply means price. We are expecting price to go up for us to make profits. If price goes down, we are losing. So as a result, so that in order for us to limit the losses if it goes down, so we'll put our stop loss below. That's what that explanation just simply meant. All right. So the other explanation that it gave again is, he said when the market price reaches the stop price, the order becomes a market order. That is, anytime price would reach this your stop loss point, it's going to trigger this point and become it will sell it off. Your buy now become a sell order. That's just what this place is trying to describe. Are you guys following me on YouTube? Just drop number one. Drop number one if you guys are following me on YouTube. YouTube guys, if you can hear me clearly, drop number one. If you guys can hear me clearly, drop number one. Okay, good. Someone said they can hear me, they can hear me, they can hear me. Okay, 11111. Okay, good. I see what you. Okay, the paid member said he can hear me. I see what you. I see your one clearer. Your one is more vivid. I see. Okay, now, so let's take it. Let's go a little bit faster. Good. How to set a stop loss based on support and resistance from charts. So for a long trade, the stop loss is usually set just below the former resistance, which has now become support, and for a short trade, just above the former support, which is now resistance. So you can see the diagram that he put here. So you see that there was first a resistance here, price resisted here, resisted also at this point, resisted here, and it's support. So let's go to the live chart and experiment that for you guys to see, like the current chart. So how you can do that is just go on any time frame, 1 hour time frame, 4 hour time frame, just to do your support and resistance, any time frame. So if you see, if your chart is like this way that my chart is, just come here, hover around here and press the A. There's one icon, there's A and there's L. You click on A, and that toggle on your auto chart to fit. It fits. So now it fits to your screen. Or you can go to a higher time frame and all of that. So let me just experiment that thing that we saw right there. In any particular condition that you are in, the market always have levels where you get to, it bounces off, and goes back to that level. For example, we have this level to reckon with. So this is a point where market has resisted. All right. If you expand the same point now in the future, you see it also got there. We got to this point, it resisted. Price also got to this point, it resisted. You keep seeing that happen over and over again before it was able to finally break to one direction. All right. So it got to this point, it resisted. So stop losses can be set at this point of resistance because it just lets you, it goes to show that, let's say, for example, you were in the market when price got here. Since this level is always rejecting, that will tell you that anytime that price gets to this level, there will be a likelihood of rejection. So you want to put it on the last high, just so that if price gets to that point, you will not be stopped at all. It is hard for price to get to that point. That is the essence of stop loss. But however, if price even gets to that point, how much will you be risking? That is something that is another important topic. What would you be risking if price gets to that point? So now that's where let me go back to the slide. I don't want to take you guys to, let me not take it too fast. So now the 3 big mistakes that I made when setting stop loss. Number 1, placing stop loss too tight. All right. Number 2, place stop loss too far or too wide. Number 3, placing stop exactly on resistance or support level. These are the 3 big mistakes that traders make. There are other ones, but these are the common ones, the basic ones we want to treat in today's class. What is placing stops too tight? Please, if you did not learn anything from today's class, take this lesson I'm about to teach you away. You don't set stop loss based on your own account balance. The world doesn't, trading view or chart doesn't revolve around you only. It's not considering Adewale. Okay, let me just, since Adewale sets 100 pip stop loss, let me just help him and not, let me just do 80 pip and not get his stop loss. Market is not about sentiment. It doesn't care about you. Now, this is a message to those that set stop loss based on a specific amount. I only use 10 pip stop loss, or those that say I only use 20 pip stop loss. Those that say, oh, I only use 50 pip stop loss. This message is to you guys. I only use that. I only use this. Market doesn't care about you. It doesn't care about your account balance. They don't know. They don't care. I don't want to say they don't know you. I don't want to come too hard on you guys, because today I'm just on a soft level. I'm on a pure level. But the truth is, don't always be thinking that. When you are thinking, when some traders think, I'm laughing, say, no, my stop loss is 10 pips. Who tell you that market cannot clear you out in that 10 pip and move in your direction? That's why sometimes you feel that you see that your direction, you're always correct. You know how to predict the market. But trade it now. When you trade it, market will take you out before you start moving your direction. That is a problem. That's stop loss problem. If you have that problem, then this class is hold this class very, very tight. I discussed more about this even last Wednesday. This coming Wednesday too, I still will be shedding more light on it in the premium class, in the mentorship class, right? But now, I still want to give you guys value while you're here. Now, how do you set stop losses? How do you leave these common mistakes? Good. Whenever you are setting stop loss, for someone that says that I want to set 10 pip stop loss, then that means that this person will be putting the stop loss right here. No base reason, baseless. So why this one is wrong? Why this one is a very big mistake? The common mistake that the person is making here is, number one, the person is not putting market structure into place. Number two, your entry determines, it's very rarely, like it depends. That means this person's stop 10 pips can be price. Stop loss right now is 1.2, would have been 1.25272 because he had entered entry here. What if the person had made the price here? Maybe the price had changed. Then the stop loss would have still be 10 pips still. So that means the stop loss would have changed here. The only reason why he's basing off of his stop loss based on 10 pips is that he just think that 10 pips worked the last time when he was in the market. Then let me also put 10 pips. All right, that's the wrong way. Or he thinks that 10 pip is $100 in my loss. If I lose $100, then I think that's 10 pip. Let me just put it. Then it's just like you're giving market money. You're giving market free $100. You don't set stop loss based on a static amount of pip because you were taught to do so by some YouTube videos. You are giving money back to the market crazily. Now, how do you do it? Number one, you have to have a level where price will never get to again. So what are the levels of hesitation, like the one I showed you a while ago? So, I took you guys to 1 hour chart and I drew a line. Now, imagine someone who was trading this kind of market, right? And he was supposed to go short somewhere around here, was supposed to sell here. And then he's putting his stop loss somewhere here. So no doubt he was predicting because, market used to get here and sell. Then he used to sell, you want to sell here. You want to sell, let me say, he went on a sell here, right? Good entry. That is, if market go down, he make profit. But then he put his stop loss 10 pip. Let's do 10 pip gang. This guy, he pushed his stop loss to be 10 pips. What would have happened? His stop loss would have been taken out and the market continued in the right direction. But what is he supposed to have done? What he's supposed to have done, simple, is to put stop loss on the recent high. All right? The recent high happens to be this level. Let me put my crosshair. The recent high happens to be this level. And not exactly on this recent high. That's 1 point. And you shouldn't put it on exactly on the recent high. You have to give it enough breathing space. That is what these 2 points means. Placing stop loss too tight, placing it too far or too wide, placing stop loss exactly on support or resistance levels. That's what these third points mean. You don't put it exactly on the high. You have to give it enough breathing space in times where spikes comes. Spikes will only come. Market doesn't go in a straight way. So these are the best way to correct that. So let me recap that again. Please kindly pay attention. Pay attention. Pay attention to this number to tell you. Please. People are sending series of things on Facebook. So now, number one, place stop loss based on structure, the last hesitation point. Number two, do not place it directly on the high. Give it some enough breathing space, depending on how volatile the pair you're trading. If it is GBP USD, you have to give it some threshold. And number 3, which is most important, do not set stop losses based off of your own, because you think, oh, it's 10 pips I want to set, or it's 20 pips, or it's 50 pips. It might be too wide, it might be too small. Instead, set stop loss based on the market structure. Market always give you a point to put stop loss. So it just give you a clue. Okay, I will never get here again. That's what I mean. Point of stop loss. Market will always tell you, oh, I'm not going to get here again, so put me here. All right. Put me here. Put me here. I'll likely not. It give you a clue where it would likely not get to again. That's what I mean. Market always give you a point of stop loss. Do you understand? So if only you are trained, your eyes are trained well enough to see those points where it tells you, oh, I will never get here again, then you'll be able to set stop loss correctly. And I'm sure I've been able to make justice to today's class. And I'm sure you guys gain value, right? So let's see if the other moderators have been able to get their network to be stabilized. And then we can get to ask them some questions, how they were able to do it on their own end. All right, so let me get some questions. If you're on Facebook or you're on YouTube, let me see questions. Okay, someone is saying, how do you know the amount that you're going to lose if you put a particular stop loss good? That's a very fantastic question from who asked that question. Oh, he's already gone because a lot of questions already covered it up. But that's a very fantastic question. Kudos to that person that asked. Remember, I said stop loss is going to be here, please. Now, why did I say stop loss here first? I'm setting the stop loss here because this is a last point of hesitation. Market got here, hesitated. So I'm putting it here. I think price will not get here again. Or if price gets here, I agree to be wrong in that particular analysis. That is just a simple meaning. Okay. Now, someone asked a very important question. How do I know amount I'm going to be risking? Good. So that's why position size calculator is important. So let me show those who are on Facebook too. So how do I know the amount I'm going to be risking? You come to firepeopfs.com. You click on lot size calculator. That's to know the lot size and how much you are to be risking when the trade whipsaws against you. All right. So in trading, what we do about risk management is we plan of worst case scenario and what to do when that thing happens. So on GBPUSD, let's say, for example, I have an account of $100, right? And in percentage, I want to risk 10%, for example. And the stop loss, I don't know, but I set it up based on market structure, like the way we set the stop loss. Now, what is the stop loss that it is giving me here? It's saying that the stop loss is 21 pip stop. So it is what it gives me here. That's what I'll come and put here. I'll write 21 pip stop, and I'll click on calculate. So hitting that calculate button means that it's going to give me my lot size. The lot size is saying I should use 0.04. So 0.04 is what I'm going to go to my MT5 or on my MT4 to go and impute this 0.04. That will mean if price go against me, this number of pip stop loss points, 20 pips, 21 pip stop, I'll be losing $10. So what happens if it gives me 50 pips? If my stop loss here is saying 50 pips, then I'll come here again and put 50 pips. So there's already a tool that we've designed for you in FirePip that you can use to do all these things. So he's saying you should use 0.02. 0.02, though you're using risking 50 pips as stop loss, you still be losing $10. All right. That is how everything goes hand in hand. I hope that makes sense. So this is how to know how much you'll be risking. Please kindly note, this amount here is usually not exact. It only gives you rough. So sometimes when it's 10 years, it can be like you might lose like 12 or say 15 max. But this is just an amount that you'll be risking. So on Facebook, someone is asking on Facebook, what should I do when the most recent high is far from my proposed entry? If it's far from your proposed entry, you check, is there chances of it giving you 1 to 2 risks to reward? That is, if the number of stop loss is 50, can it give me 100? If your number of stop loss is 10, can it give me 20? If it's 40, can it give me 80? If it is yes, take the trade. If it is too much, it can't give you that amount, don't take it. It's not worth your time. All right, that's for those who is on Facebook. Someone is asking, how do I enroll? All you need to do is to go to firepipsfs.com and with firepipsfs.com, and then you get to sign up. That's all. firepipsfs.com. Here, this is the link. Come here, you click on first. You can even start with a free class. We have free class that are for beginners to learn Forex. So there's no excuse for anybody to say, oh, I'm not learning Forex. Everything is right here in your front. You can start with the free class, which is here. Once you come here, firepipsfs.com, which I have dropped the link, you click on join free class. If you click on join free class like this, you sign up, basic sign up, and then you should have access to the free courses. Let me log in. Let me log in so that I can show you the courses and how to navigate. So you come here and then you click on this free beginners class. On this free beginners class, you add to library and then you'll be able to proceed to watch. So you see tools you would need, tools serious traders need. What is forex, market participant, broker, base and close currency, everything. How to place trade, how to get entry, all these things for free. You don't have to pay any dime. The only one you need to pay, maybe you need a special mentor, somebody to take you hand on what forex is A to Z. You don't want to stress. That's when you enroll for, and the amount are also on the website. So they're also on the website if you want to get access to that. It's pretty simple, right? And again, in the mentorship, you get more things, right? You have monthly, 3 months, 6 months, and yearly. These are the things you get to on that. And then we have classes every day, Monday to Sunday. There's classes every damn day. We teach crypto, forex, we teach stocks, we teach indices, everything all in one place. All this amount, anyone, whether monthly, all of them get you access to all of them. You can pay through dollar card or foreign card, crypto, and through bank, Naira, transfer anything. You can also go to the office and also pay. All right. These are the things that you all should be aware of. Good. So is there more question on YouTube? Is there more question on YouTube? Is there more question on YouTube? So William, are you there? I want you to share with me the common mistake you used to make when you set stop loss. When you set stop loss, that's what I want to. The common mistake you made before. William, Shams, are you guys there? Shams, are you there? William, are you there?
Yeah, good afternoon. Good afternoon.
Yeah, good afternoon. How you doing? Your network, I mean, your sound is not so good. You want to remove it from what's it called? From your headset. Okay. Talk directly to the microphone.
Can you hear me now?
Yeah, we can hear you. Suleiman Tohib said your free so your free class is okay. This is from Lolia Emanuela Hart. Thank you very much. So your free class is loaded with maximum value. I appreciate you, madam. I appreciate you. I'm happy that someone is getting that value. So now, William, you go ahead. We can't hear you. Your mic is muted.
So yeah, can you all hear me now?
Clear. A lot more better. More like it.
Amazing. So basically, stop loss is very important. And the reason for that is because if you don't want to see yourself back in where you started from, you must make sure to set stop loss. It's very important to do so. Whatever you're doing, whatever currency pair you're trading, set stop loss. The reason for this is that you don't know how volatile the market can be at that particular point in time. So before you place a buy or a sell, it's very important to set in your stop loss. And the stop loss helps you. And the reason why you're setting stop loss is so that you not risk more than what you have already planned on risking. And please, it's very important to also note that whenever you set stop loss, do not try to start adjusting it so that market will go to your direction. That is your emotion kicking in. Because a lot of us have this. When I started trading, I used to do that mistake of whenever I set stop loss, our market is coming to hit my stop loss, I'll start extending it furthermore. That does not make sense. This is not the way of trading. The way of trading is whatever risk that you have planned on using that particular trade, basically set your stop loss and let it be. So one of my colleague, one of my friend always do set and forget. If she set her stop loss, she just forgets it. Whatever markets do, at least it has saved her capital from not blowing off. And one thing in trading is capital preservation. If you want to last long in this forex business, you have to do what? You have to always make sure to keep your capital preserved. And what helps you to do so is the presence of stop loss. So I'll go back to Bitcoin US dollars to check it out, to show you guys what I mean. So let me share my screen on Bitcoin US dollars. All right, can you also see my screen? If you can see my screen, let me know.
Yes, we can see
the screen. Amazing, nice. All right, so on Bitcoin US dollars, setting of stop loss, as Sir Jeffrey already mentioned, is based on market structure. Do not try to set your stop loss based because of you feel They don't feel in trading. You don't feel. It's what market gives you, the structure of the market. Because structure is like the skeleton of the market. Do you understand? The backbone of the market. So it's through structures, through understanding structures, that's when you can now be able to place your stop loss. The market is moving up, like let's say market is on an uptrend right now. Let me give you an instance. The market is giving us like an uptrend. We know the principle of an uptrend. So this is what they call structures. As an analysis for it is waves. In layman terms, you can see the up and down movement of what the market is doing. So now, the market is this an uptrend right now. Market is retracing down. If you want to enter for a buy, where do you think your stop loss should be? Your stop loss should be beneath this particular area that market has created already. Your stop loss should be here. This is what they call structure. So probably you're entering at this point because of the confluences that was there, like trend line, psychological level, high and low of the week. You're planning on entering at this particular area, yeah? Now, where you should put your stop loss, you should not put your stop loss beneath here, because you do something wrong. Once you put your stop loss, it's beneath that low that created that high already. That is what structure is. That is the explanation of structure, just like a very brief explanation of structure. So always put your stop loss beneath this particular low. This for an uptrend structure, this for an uptrend market. So what you're expecting is if market comes here or comes to this particular place, at least it should not break this particular place. That's why you're giving what? A breathing space for market to do what? Play around. That's the importance of stop loss before it starts going to your direction. Same thing with the downtrend. Remember what the definition of a downtrend? The definition of a downtrend says that what? Market, let me delete this one. Let me delete this one first. The definition of a downtrend is that market will be creating lower lows and lower highs, so long as it's in a downtrend, right? So now, for stop loss level to be placed, it should be based on structures now. So now, if market is reversing back to the upside or retracing back, where your stop loss should be is basically where this market has created the low, has created the high that created this, a high that created this low already. So your stop loss should be above this particular place, not this place entirely. Market comes and break out from here, then this structure entirely has been violated. Do you understand? So that's why whenever you're putting stop loss, it's not based on what you feel, it's based on what market is giving you, the structure of what market is giving you. So you cannot just get your short position here. Probably you want to enter at this particular point because of what? The confluences. There should be confluences before entering the market, like the trend line, psychological level, high and low of the week. So if the confluences aligns together, your stop loss should be above this particular high here. This for a downtrend structure, please. This for a downtrend structure should be based on this particular high here. So your stop loss should be something like this. We're going to practicalize this on the real chart now, so that you can also better understand it. So this is how your stop loss should be placed here, and you're expecting it to come down. So the reason why this thing now is giving you a breathing space, in as much as our market wants to go down, the market still come to this particular place, this particular area where your stop loss is not going to take you out. You still be risking that. You still be in that parameter of what the amount of that particular amount of money you want to lose. Let's say you want to lose $200. You have calculated it on 5 pips calculator, and you want to let me give an example. Let's say we come to 5pipsfx.com. We come over to lot size calculator. When it comes to lot size calculator,
we can't see that screen. We're only seeing your chart screen still.
We only see my chart screen.
Yeah, because you shared only that particular window.
Oh, okay. Let me just stop sharing. Let me present it again. Share screen. Okay. Can you see my screen now? All right.
Yeah, we can answer.
So basically, you come over to 5pipsfx.com, then come over to lot size calculator. So when you come to lot size calculator, you come over to the instrument you want to trade. Which the instrument you are trading is Bitcoin US dollars, which you already have it here. You come to crypto, click on crypto, then Bitcoin USD. So let's say let's say you have $1,000, or let's use example $100 as your account balance, and you want to reach 20% of it. Then the stop loss level should be based on the structure. Now you now go back to your trading view to know the amount market is giving you. So let's say our stop loss level is 43 pips, right? Let's say our stop loss level is 43 pips. You come over to Fire Pips Calculator and click on 43 pips. So click on Calculate. So the standard lot you have to use on MT4 or MT5, depending on the platform you're using, is 0.465. And the amount you're risking is $20 out of what? Out of this $100 that your initial balance was. So what it's saying is that in as much as market is at these parameters, these stop loss parameters, you won't reach more than $20. You won't reach more than $20 so long as you put your stop loss. That is the essence of stop loss. So now let's go back to the chart and particularize this on live market. Okay? On the live market. With the explanation given to you, come over to Bitcoin. This is Bitcoin US dollars, please.
Do you want to take a trade right now?
Bitcoin US dollars to be looking like this.
Do you want us to take a trade? You're trying to check.
Yeah, let me give a trade.
Okay.
Yeah, let me give a trade. So I'll come over to the daily time frame. I've not analyzed this. Let's analyze it together now. The structure of the market is still giving me an uptrend on the daily time frame. I'll just come over to 4 hours to look for the pattern. So in as much as market is giving me a downtrend pattern on 4 hours time frame, fine. Then I'll come over to the 1 hour time frame. So I've never plotted my psychological level. I haven't plotted my trend line. I'm just understanding the market. That's what gives me an edge. So when I come to this particular place, what I'll be looking out for to do is what? A short buy. A short buy, guys. A very short buy. So in 15 minutes, I'm expecting market to do what? Buy to this particular area. There we'll call it. So where should my stop loss be if I'm buying? Where should my stop loss be if I'm buying? I'll come to this particular on my trading view. Just come to projection. That's where this projection. Can I unupdate? Okay, this particular area here. This way you can click your buy and your long and short position. It helps you to calculate your stop loss pips immediately. So now we place it here. Let's expect the market should retrace. I'm expecting market should retrace down a little bit. Since this candle has not fully formed, then give me a bearish candle, then it's good for us to buy. So where my take profit should be here, but I don't really look at take profits. What my most important thing is my stop loss level. The amount of money I'm risking. That's what I always look at. So now this is what we're expecting. Why is our low? Why is our stop loss level here? Because this low was what created this high for us. So I didn't put my stop loss level to be here. I extended it to be this particular low here. So I'm giving markets a room to play around this particular stop loss area before heading up. So I'll now come over to firepipsfx.com to the calculator to do what? To calculate how much. So let's say I'm using $1,000, then I'm risking 3% of the account. Then my stop loss level, because of how Bitcoin is very volatile, the stop loss level is 391 pips. But the risk reward you are giving to us is 1:2. So for every 391 pips you're risking, it's going to give you 600 and something pips in return, 796 pips in return. How do you know your stop loss? I know a lot of us are asking, how do we know our stop loss? So let me expand a little bit so you see it. How do you know our stop loss? Okay, you just come here. So this top, around this top here, is showing 391.7. That is your stop loss. 391.7, that is your stop loss. Then your take profit is what? See the target, where you wrote target, is 796.3. So it's saying that for every 391, if you're risking 391 pips, you'll be getting 796 pips in return. The market comes to this direction and take you in profit. So the risk to reward here is given to us is 1:2.03. It's going to also calculate your risk to reward. The market comes to your direction and hits your target. The risk reward is 1:2.03. So let me explain this on Fire Calculator as well. So 430. How many pips do we calculate as a stop loss? It's 391 pips. We come over to Fire Calculator and click on 391 pips and click on calculate. So now I'm risking 10% out of this. So now I'm risking $100 out of this $1,000. That's why I'm risking 10%. So the standard load I'm meant to use is 0.256. 0.256. So when markets come to that direction that we're expecting, we use 0.256 to enter the market on our MT4 or MT5. Okay? So the amount of money if market comes against us is $100. Now, if market comes to our direction, how much are we going to be getting? That's when the rich reward come in. If we're risking $100, that means you're going to be getting $200 in return. $200 in return. That's what this risk to reward ratio explains. That's what the explanation of this risk to reward ratio. So that is it basically on how to use stop loss on Bitcoin US dollars. All right. I hope if you have any question, you can also ask me. I will definitely answer.
Thank you
Thank
very much, Williams, for sharing this huge insight with us. We appreciate you. So Shams Network will not let him come to explain how it works on what's it called, on indices. But then it's just basically the same concept that we explain in all areas. So if you have more questions, please kindly come to the mentorship. You can get to ask question in the group at any time. So for those who are having problem, maybe you are someone. I saw someone the other time. He's saying that he's trying to message support. I don't know what, but it's important you message us. Please, William, kindly drop our means of communication. WhatsApp. No, we don't have WhatsApp right now. WhatsApp, we are out. But our call number is 0700. Let me drop it here. Call this number, right? Your challenge will be resolved immediately. Any issue that you have at all with us will be resolved immediately. Let me also write it here for those who are on Facebook. So you can call us international anywhere. They will respond. This number works all the time. All right. So call us up, and then that will be sudden. Or you can send us a DM on viapips.fx. That's our business page. Or you send a DM to me, Jeffrey_Benson. But on no cost, for no reason, nobody would ask you to send money to them on a personal account or on WhatsApp, on Facebook. If you're currently chatting with somebody on Facebook right now, people are talking about investment, or send me money, I want to trade for you, send me money to join my course or my mentorship, just so that you are dealing with a scammer. I will never ask you to send me money to trade for you. Whether Facebook, Instagram, TikTok, any platform, Snapchat, anyone at all, I will never ask you to send me money personally or any of my agents. They will say you should go to the website to pay, and they will guide you. That's what they can do for you. Please do not send money to anyone at all. Whether Shams, they're using Shams' name, William's name, anybody's name at all that is in FirePip. All right. Thank you very much, everybody, for sticking around. I'll see you guys some other time. Bye. All right. So, bye, guys. Make sure you keep it positive this week. Back-to-back wins this week. I'm going to be sending signals in the Telegram channel. Make sure you guys are staying there and staying lit all the time. Bye for now.